Obviously, all these issues are interlinked in a global economy. We can't look at a slowdown in China without really thinking of commodity prices, and especially oil. Mm-hmm. There have been some new forecasts this morning coming out from large investment banks where they see the price of crude going down to $20. Mm-hmm. Where do you see that going based on your view on the global economy, on obviously the supply of oil and how that can impact that market? Because that'll also be an indicator as to price stability going forward.
Now, on oil, we have quite a strong contrary view and have had over the last year and a half, actually, in both directions. Okay. A year and a half ago, when the oil prices started falling and fell first through $80, then $60, then $50, the predominant opinion in the market was that this was just a temporary blip and oil prices would bounce back. We were extremely bearish about the oil price, really going back 18 months ago, and I think I was one of the first to write back in November the year before last, saying to say that $50 is not going to be the floor for oil prices, it's going to be the ceiling for oil prices in the long term. So I'm a long-term oil bear. Having said that, I now begin to take a contrary view. When everybody is now talking about $20 oil, it seems to me we're quite near the bottom. Now, I don't know whether the bottom is $30, $25 or $20, but it's much more likely that over the next year, oil will stabilize than continue to fall. The other contrary view we have, which is even more important for other markets, is that the fall in oil prices is not a leading indicator of weakness in global economic activity. Okay. In fact, if you look back through history, it's exactly the other way around. Every global recession since the 1970s has been preceded by an increase in oil prices, doubling or more. There's never been a global recession in which the oil price has not doubled beforehand. Really, even up to 2008, a lot of people forget, they think it's just Lehman. Actually, before 2008, the oil price went up from $40 to $120. So every recession has been preceded by an increase. Every time the oil price has fallen by more than 40%, global growth has accelerated. Okay. I think the same is going to happen now. The reason oil prices are falling is not because of weak demand, it's because of huge increases in supply, first in America and now in the OPEC countries, in Saudi Arabia, in Iraq, and next in Iran. So I think if oil stabilizes in a range of $25 to $50, which I think is now almost the consensus outlook, that is actually a very good thing for the world economy and for financial markets.
Great. Well, thank you very much.